Greetings, Dr. Jeffrey Scott here, live from Portugal, the Douro Valley, and this is my weekend market update. I titled this week, Topping is a Process. This is for Sunday, April 7th, 2024. My email address is hgsidoc@gmail.com. If you're new to my channel, hit the subscribe, hit the alarm, and you'll get notified when I post these. And if you have any comments or questions, whether you're new or old, either email me or use the remarks section and I will return your call. I may be the only person crazy enough to do videos when they're on vacation with their wife. And when I do this as a unpaid, more love of trading video than anything else. So glad you're here and let's take a look at the markets. As always, this is for educational purposes only. Any recommendations I make should be considered to be in the spirit of education and not investment advice. I am a doctor, not a broker. I am independent. I paid for the tools that I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. So, one day away, Well 365 event. If you haven't registered, please register using my name, and I hope you can join me on Saturday, April 13th from 10 to 11 a.m. Eastern Standard Time. I'll be back in the U.S., and I look forward to this opportunity. Daily market analysis can be found at stocksanddocs.com. Even when I traveled, I posted a couple of times this week. Again, no charge. There is a mailing list that I don't have access to. If you fill out the little pop-up in the lower right, they'll send you out an email when I post them. I like to start by looking at the major markets, and as you can see, a lot of red. So if you look at the highlighted in yellow are the major indices, and you can see they all were down on the week, led lower by the Russell and the Diamonds, the Dow. Interestingly, on Friday, all of these were up. Big down day on Wednesday, I believe, when the markets were trading higher most of the session, and then about the same time, oil spiked and the spiders spiked down when concerns came out about the Israeli government notifying their embassies to be on heightened terrorist alert. Now, over the weekend, we heard that the U.S. is now on an increased alert from an Iran terrorist activity as well. You could see from a sector perspective, almost everything was down, and no surprise with the challenges going on in the Mideast. Uh, Energy led to the upside up 3.9%. If we look at my Q Edge tool from my buddy Sagar, which is powered by Metastock data, you could see a couple of interesting things. First of all, you could see the strength on Friday. 73% were up, 71% of the industries were up, 66% of the stocks, so 73% were sectors. So a very strong day in the market. Over here, it's really a 50-50 market. So it's not a market that's overly bullish or bearish if you just look at where the stocks in the S&P 1500 are falling. This is what Thursday looked like, and this is what bad looks like. 100% of the sectors were down, 90% of the industries were down, and 79% of the stocks were down. I guess it was Thursday that the market tanked so badly. If you look at over the one day, you can see a lot of green on the sectors, industry, and stocks. On the week, mostly a negative week. 91% of sectors down, 86% of industry groups down, and 79% of stocks were down. Over 2 weeks, also a week. But when you push it out to a month, it's more of a neutral period of time. So we definitely have seen a downgrade in the market. Also a Q tool, this is Market Breadth powered by, using Metastock. You could see right here, which is a composite of the NASDAQ plus the NYSE. We had kind of like railroad tracks where we dropped down hard on Thursday and the NYSE showed some big distribution. And then on Friday, we popped up almost an equal candle. That could be a bullish sign. So if you're in the bullish camp, you could put a check mark there. Now you notice coming up this line of this composite, that we have a number of skull and crossbones, and that they're magenta, which means they are confirmed Hindenburg omens. And we had one on Wednesday before the Thursday fall off. The blue arrows up are bangos, which are irrational exuberance to the upside. I don't know how to say anything except to say this market keeps going higher with lots of signals that it's going to fall. And that's why the title is Topping is a Process. Now, last week my title was What Happens If We Don't Get the Sell-Off? And I think that's still something to consider because it may be that parts of the market do very well even with a rollover of other parts. If we look at the two composites, you could see that most of the Hindenburg omens are coming from the NASDAQ. And the NASDAQ was the big leader on the way up. Just think about NVIDIA, SMCI, and some of the other big cap AI names. And the NYSE has a lot of bangos, but only had a couple of these Hindenburg omen signals. Breaking it down to the various indices, the other thing to look at here is this light blue line, which is a 3-month new high, new lows. And you could see that things like the NASDAQ 100 are so oversold that they're at an area you expect to bounce from. Same thing on the Dow. And then lastly, one of my other heads-up displays that I like to use during the week is this Nick Drendel spreadsheet. And it tells me so much. It shows me on Friday the strength in the market, but not ARKK. It shows me that now all these major indices are trading below their 21-day, except for the Qs, which is trading at the 21-day. It shows me down here that especially on the NASDAQ, we have an issue with new lows. It's hard to see markets making new highs with new lows exceeding new highs. And then if we look at performance, you can see the strength of the session on Friday with almost all of these 25 top industry or themes higher, led by cannabis, gold miners, internet, metal mining, home builders. And you can see over 5 days it was gold miners, metal and mining, and energy, oil, gas, and exploration that led the way. But look, over 5 days, the majority of the groups are down. Talking about energy, over the month up 11.6, and over the last 50 days up nearly 20%. Looking underneath, white is the 10-year on this side, right is the 30-year up, S&P in yellow, rates up, stocks down. Is there a recession in our near future? I think I take this off the short-term worry part. In fact, there's so much strength here. Look at the Philadelphia Diffusion Index, not at all in contraction. You don't get recessions when you're above minus 20 on the Philadelphia Fred Diffusion Index. You don't get recessions when you have no evidence of credit tightness on the BOA U.S. High Yield Index Option Adjusted Spread. You do get recessions, these gray bars, when you cross above the neutral line on the 10-2 or 10-3 yield curve inversion, and we aren't close to that. So to answer my question above, is there a recession in our near future? Well, there's always a recession in our future. I just think we have one coming up anytime soon. And in fact, one of the questions I think we have to ask is, will economic activity be strong enough to keep us from going into a bear if the Fed decides not to cut rates? Breadth, well, the market was down, so breadth ease. You can see stocks above the 200 came down from elevated levels. Stocks above the 40 came down from elevated levels. The 3-month new high, new low came down from elevated levels. So breadth ease, there's no sign here of overheating. AD lines, the one that diverges is still the NASDAQ composite where the index is up and the AD line is down. A little bit of a separation on the Russell. But notice the large cap Russell 1000, NASDAQ 100, and the overall NYSE. Lock, stock, and barrel AD lines in the index showing you that this divergence, which everybody talks about, really looks like it's a NASDAQ composite and Russell 2000, so a small cap problem. Another thing that's important to notice, as much as we talk about the Russell 2000 and we recognize the importance of that index, if you take all the stocks market caps in the Russell 2000 it is still smaller than the top three in the S&P 500. Current buckets, as I mentioned before, this is taking all the stocks in the S&P 1500. On the right, how many are above the midline of their Bollinger Bands, how many are below, almost a 50-50 market. And when you look at the spread, very few stocks are below their bands and very few stocks are above. So a neutral picture. So intermediate term, the market has been strong. Short term, it's weakened, but this snapshot says the market is neutral. Now, this is interesting. Hindenburg omens are typically calculated on the NYSE common stocks. We had a confirmed signal back here on February 5th. We have not seen another signal. It's been 2 months from that, and frankly, I don't pay much attention to it after that much time. Notice, however, here the new highs are still strong. There are no new lows, and compare that with the NASDAQ where you have bunches of both new highs and new lows. And look at all the confirmed Hindenburg omens. What confirms a Hindi is within 30 days of a signal, you get additional signals. We're going to come back to this. The NASDAQ, who knows what that means? I think it might mean something. I'm going to show you some data of why I'm concerned. But the Hindenburg omen is typically described with the NYSE. Now, everything was pretty much down. Remember, this light gray is a number of stocks. There are very few stocks at the tail. There are very few stocks at the head. So you have sort of an uptrending in the middle here, favoring the high end of ERG, which is growth. ERG is EPS rank plus relative strength plus group rank. This is showing performance, and you could see, even though everything is below zero, you do better with high earnings and high relative strength, and that stocks that were accumulating A's and B's the prior week outperformed those that were distributing. So growth holds up a little bit better in a down week. What about news and earnings for this week that's coming up? Well, we have a lot of Fed heads speaking, and this market whipsaws by the Fed speak. We're having more rate cuts. We're not having rate cuts. Inflation's good. Inflation's bad. It changes by the day. That makes this market hard to trade. If we look at the other things that we're going to get this week, we got the CPI complex, the PPI complex, and we got the FOMC minutes. So this could be a doozy of a news-driven week, despite the fact there's no Fed meeting. But we do have a lot of Fed heads speaking, and when the Fed presidents speak, the markets listen. My weekly timing model, I'm showing it here because I want to show you a little different thing when I go into wealth charts. Two things have to happen, and my model is dictated by weekly, not by daily. Price above the WMA on a weekly chart. This is spiders, Qs, diamonds, and even the Russell are all above their WMA. The second thing, the Bongo, which is an indicator that I created with a bunch of my friends years ago at the request of my mentor Ian Woodward. If it's green and price is above, you're still in a buy mode. So the longer term trend model says the markets are still going higher. However, the daily one shows breakdowns on the Bongo and all four indices. And despite the fact we got back above the WMA on the daily chart on the spider and the Qs, we're still in pretty much sell mode on the Russell and diamonds and more neutral on the Qs and the spiders. So I'll talk about that in a slide, what that means to me. But just take it off the top that my conviction on my buy-sell model goes into a less bullish scenario when the daily is going opposite the weekly. I don't know with this whether this is the beginning of a significant pullback or it's just a whipsaw short-term correction. I don't use the daily for my major signal for that reason. It can flip-flop too often to be, frankly, a consistent market timing model by itself. So my thoughts, we started the quarter with some volatility, rising rates, Good economic data, sticky inflation figures, all cause issues. Whether or not we have rate cuts, again, depends a lot on what the Feds say, but it's fallen. The likelihood of June. The increased geopolitical tensions in the Middle East haven't helped. And as I said, my weekly timing model suggests we still go higher, but with the downgrade of the daily signals, caution is warranted. To me, that means smaller positions, no margin, raise cash, and watch contra ETFs for entry points if they're given. Notice I didn't say go out and buy contra ETFs. Look for entry points. This market still has the weekly signal saying it's going higher. And again, if you like this rantings and ravings, come join me a week from, well, it's still Saturday when I'm doing this, but in Portugal, that's only for 10 more minutes, then it's Sunday. But join me next week when I do my live event on Saturday, April 13th from 10 to 11 a.m. Nope, these are not recorded. I don't control that. But the Wealth 365 folks do not record the sales events, and it's part of their larger sales event. Let's go take a look at the charts. I like to start with a intraday chart, 5 minutes on the spider, just to get a sense of what happened in the week in the markets. The white line represents the close of the prior week, and you could see Monday dipped below the close but didn't do much. Tuesday gap down, tried to recover intraday. Wednesday we moved back up, didn't quite fill the gap from Monday, sold off into the end, and then Thursday we saw a big gap up in the market, got back above the close of the prior week, and we did fine until this area here, which 6:40 p.m., which would have been about 1:40 p.m. Eastern time, because we're 5 hours ahead in Portugal. The market sold off, and in fact, if I just throw in oil, you'll see what I mean about how oil reacted at the same time. This is USO, and let me just change this very quickly to make it easier for me to talk about and to see, and that's to make it a line. Isn't it interesting that right here, oil spiked higher and the S&P spiked lower? You know, there was a number of Fed heads that talked down rate cuts, and that was probably part of the problem. But I really think with oil changing the way it did, this was Iran. So that was the week we came from. Where are we going to go? Well, Friday, you could see that the market actually tried to recover, and it sort of got back up to where it was before the gap up on Wednesday going into Thursday. Um, but we still closed down on the week, and I don't think we've resolved this issue that we see with the sell-off and the upsell of oil. If we look at the major market indices, especially across the top after these belt hold bearish engulfing patterns that we saw on Thursday, you could see on Friday up 1%, an inside bar on the spiders, up 1.24, an inside bar on the Qs, and up 0.74, and pretty much an inside bar on the diamonds, and on the Russell up 0.33, certainly the laggard. On the week, you might have expected volatility to go up, and you would have been right. It was up 23% on the week, and it was up. It was actually down on Friday 2%, but on Thursday it was up 14%. One good thing about this volatility going on is we actually saw the dollar kind of come up off of its recent highs with the entropy in the markets. If we go and look at commodities, if the dollar came down, you'd expect gold and silver to be up, and they both are breaking out. 1.71 on gold. If you look at silver, up 2.2. One of the things I like so much about wealth charts is the ability to do these ratio charts. And let's just go to a monthly on that ratio chart and see that although gold has done very well of late, The gold versus spider monthly is nowhere close to any kind of an all-time high. But gold itself is doing extremely well in the short term. Oil moved up a lot on Thursday, 1.26%. On Friday was up just a bit, 0.16%. Natural gas is dead. And then the 10-year, after pulling back with the concerns of what was going on in the market on Thursday, actually had a nice recovery and was up 1.6 on Friday. Nice for the 10-year, not great for those of us that like to make money in the markets. Here is something that I've not shared before, and I've talked about doing it, and I did it. So let's take a look at the NASDAQ composite. And as I mentioned, typically the Hindenburg-Omen is a signal that is found on the NYSE. But if we looked at the market, the run-up into the end of 2021 and the beginning of 2022, and notice we were in a buy zone here on the timing model. Here's the WMA on a weekly chart. Here's the bongo. These red lines indicated Hindenburg-Omen signals firing on the NASDAQ. They did not fire on the NYSE. My videos, the weekends during this period of time, was calling out my concern about what this meant. And as you can see, between November 10th, 2021 and January 14th, that should say 2023, we saw 9 daily bars fire. And then we know what happened. The market sold off. Well, look what's happening here. Going back to January 8th, there have been 17 Hindenburg omens have fired on the daily charts of the NASDAQ. If this was the NYSE, I'd be in cash and running for the hills because that's the traditional index that we track. So I am going to continue to do my research. I've asked my friends at HGSI to see if they can program this in so I don't have to do it manually like I did it here. If you own EdgeRater, no, you can't. These are manually placed, so they're not built into the program. But when I look at the, hold on one second. When I look at those AD lines, and let me bring those up for you. Find it on the other monitor. Got it. When I look at these AD lines here, and I see this, a big divergence on the NASDAQ, and I see this on the Hindenburg omens on the NASDAQ, I would be willing to take some bets that this market's going to have a hard sell-off. The challenge is, with what we're seeing in the NYSE, is that sell-off going to be limited to the large cap NASDAQ stocks where we've had the big run-up? I don't know. More to follow. I've got more research to do. But I think it is interesting. Apologize for any background noise that you're hearing. I think the peanut gallery is mad at me for doing this in Portugal, so making noise. If you look at the ratio charts of the S&P sectors versus the spider, remember this is not the individual sectors, it's a ratio chart. The leaders in the markets are the stars: materials, energy, and industrials. After Thursday's session, we saw some movement in the defensive staples, real estate, utilities, and discretionary, and XLV, but none of these panned out. So we're back to industrials, energy, and materials as being the leaders in this market. Now, I am going to, because it is what I usually do, I'm going to look at some longs. But before I do that, I want to reiterate that this is a dangerous market. You don't want to be all in to the long side or the short side right now, in my opinion. And that's why I have raised cash, have smaller and less positions, tight stops, and I'm looking to enter contra ETFs, which go up when the markets go down. However, if you were to look at my portfolio today, you will still see I am net long because that's what the weekly model is showing me. If we look at the heat map, you can see how strong Friday was. Well, Thursday was the opposite. Look at Tesla. I think when somebody said Tesla's going down to $14, I wanted to laugh. But maybe if I own Tesla, I might want to cry. I mean, you've got a sort of an evening star formation here, or a low close doji if you're a fan of John Person. You failed at the 50, failed at the 17, massive volume, lots of red dots. Oh, is Tesla ugly? If we look at the wealth scanner to get a sense of what's working in the market, one way was to look at those ratio charts. Let's see what we got here. We got a bunch of things above 800. Woohoo, that shows strength. What do we got here? We got silver, gold, silver. Norway must have minerals, gold, gold miners, gold, uranium. So the top 1, 2, 3, 4, 5, 6, 7, 8 minus Norway are miners. Huh. That might suggest where the strength of this market is. Oil, copper, miners, oil producers, energy, energy, commodities, oil producers, gas. And Mexico, which like Norway, is a mineral economy. Well, I don't see the industrials. I see energy and I see materials. I see energy and I see materials. That should direct what I'm going to look at. Now, I like to buy one type of a move. I like to buy this, a stock that's in an uptrend, that's pulled back, and then it starts to get my buy signals. There, that's not a perfect one. I just picked it. This is an extended stock, although, and you can see the high jump here says at 100. I get nervous buying extended stocks. But let's go look at the CAT scanner. Let's change it to XLB materials. And let's see if there's any materials that come up on this scan. So ATI, which is a type of a steel used, I think, in airplanes, but I don't know exactly for sure. I actually like this one, and it's on my buy watch. Are we in an uptrend? Absolutely. Here was a pretty big pullback and breakout on the weekly chart. We just came out of the squeeze. We have a breakout and a momentum. Actually, momentum and a breakout. High jump is fine. Relative strength and OBV look good. And we pull back into the 17 and look like we're breaking out to go higher. I liked ATI. FNV is one of the many gold stocks. I passed on this one because it's trading right under the 200. I'd rather see it after it breaks above the 200. Royal Gold has broken above the 200. Gave a little bit of a flag and broke out again on Friday. High jump shows it's extended, but I'm looking at all these major moving averages crossing over right here. I think this is a stock that's gone sideways too long. I'm not going to consider that extended. Decent volume, breakout, relative strength OBV look good. Cautious because of the 100 there, but that one looked okay. Anglo Gold, again, here's your pullback and a breakout move here. So this is when it would have been interesting. Let's see what lights up here. This stock here, not quite at 100, but probably extended. Cisco Gold, a smaller gold stock, A little bit of a pullback here, a nice move on Friday. That one looks interesting as well. So a number of gold stocks and this ATI, the specialty steel stock. I might look at energy because of what we saw on the energy ETFs leading on the top. And what do we see? Don't see a lot of things that have a lot of dots. And I'm going to show you why. RES, I think, is a steel stock involved in the pipelines. Hard sell-off, making its way higher, had a breakout in momentum out of a squeeze. Relative strength and OBV look fine. I like that one. Now, why aren't we seeing these? My guess is they've already run. So let me just change this to my Momo up screen and see what we have here. Still only twos. How about rockets? I think what's happened here on these is they've already had their move. What about industrials? Let's go back to pullbacks and uptrend. Okay, looking at industrials, one that I did like, there was a couple truckers that looked interesting, or logistics companies. This is XPO. Here was a launch indicator. Notice the dots coming out of the squeeze, the relative strength, the OBV picking up. A big move up, became extended, went sideways, no longer extended. Here we have an EMS signal. Volume breakout momentum from a squeeze, a PSAR reversal, a bongo reversal, relative strength and OBV breaking above their averages. XPO looks like it's ready for the next leg higher. Here's that ATI. ODFL was another one. Similar industry as XPO, but different, but a similar pattern, a move up, a sideways move, and a breakout of momentum on Friday. And you could see relative strength in OBV. So that would be my top-down approach. No, there's nothing great here. I do have a couple nice charts to show you. So let me go over to my buy watch list and run through a couple of the stocks that I found were interesting. Because this is not stocks that I'm going to buy on Monday. It's stocks that looked interesting to me. I want to start with XHR. Don't know anything about their business, but I really love the pattern. Xenia Hotels and Resorts Incorporated. A big move up here with multiple launch indicators, a flag, and on Friday we broke out from this flag. Here's your flagpole. The flag breakout with three dots, volume breakout momentum from a squeeze, not extended, and relative strength and OBV look good. XHR is one that I liked a lot. RAMP, I like this one for a couple of different reasons. It had a base over here, then it broke out, took out the 50 on a volume, breakout, momentums. You had two momentum signals in a row, which is a strength I like to see coming out of a squeeze, not extended, and relative strength and OBV both breaking out. Uptrend, pullback, breakout, RAMP. MGNX, I want to talk about. MGNX. I'm going to put this on my list of biotech stocks likely to be taken over. They had some positive data on a clinical trial. They make some these targeted therapies, antibody therapies in cancer care. You could see they had a 4-dot move on Thursday, closing just off the highs of the session. Follow through on Friday. Relative strength and OBV look good. This one has a market cap of 1.5. I can't see them being bought out for less than 2 to 2.5 billion. There are a shortage of attractive properties in biotech right now, and this is one of the ones that I think is a candidate, especially with their data out. What does this say here? Market outperformed, price target 0. I don't think that that's accurate. The other one that I like from a biotech perspective is Viking Therapeutics. This one had a big run up, pull back, and I think it's going to go higher here. This is not my favorite pattern by any means. Typically, this pattern here comes back down, but this is a company that has perhaps the next GLP-1 inhibitor, as well as a number of other drugs in development. It unfortunately, though, it has a market cap of 7.6 billion, 5 times the market cap of Macrogenics. I've seen 10 to 12 billion dollar takeovers, but boy, those are big. But the GLP-1's a big deal. I think VKTX is interesting in that perspective. Um, what else looked interesting to me? Here's a long list. ACGL is a insurance company. It's hit a massive uptrend, and it still looks good to me. A little pullback into the 17 and a new breakout on lots of volume with momentum. Relative strength and OBV look good. Notice the high jump is only 77, so even though it's been up like a rocket ship, it's been in a controlled move. Amazon, remember that guy? The stock is almost back to all-time highs, and gentle move, seems like it's accelerating here. 3 dots, volume breakout, momentum, relative strength, and OBV look good. Not extended. First Majestic Silver, this one's really broken out and running hard. It's a relatively cheap stock. Obviously, you got to be worried about it getting extended up here, and that's the problem. AVTR, there were a number of med tech companies, device companies. This was one of them. Uptrend, pullback, ready to move, breakout momentum, relative strength and OBV look good. COLL is a specialty pharmaceuticals company. Massive run up, pullback. I just think this thing's getting ready to run again. I think it still has some room to go. CRH is a cement name and other, falls in the industrial categories. Pullback. Look at on Friday. It had a nice move off the 17. Now this one has to flip its bongo to show up on the screens. Look at this hammer on the weekly chart on Friday. There are some nice looking patterns out there. Generac is another industrial name. They announced that the hurricanes are going to be higher this year. I always like how they can predict that. I mean, it would have been a better buy here with the launch indicators. It's not extended. Relative strength and OBV look good. I think Generac looks interesting here. Barrick Gold is another one of these gold and silver stocks that's had a big breakout. Like many, extended. MDB is a tech play who's been sold off hard, failed the 200, came back down. It's changed. It took out the 17 here on decent volume, breakout momentum, relative strength and OBV picking up. This is a bottom fishing play. No, I don't like it because it's below the 200 and the 50, but this one has interested to me. This has been a former high flyer over $500 stock. Doesn't mean it's going to go back there. See if there's anything else I wanted to point out before I say goodnight. Oscar is a healthcare insurer. Um, it's got great earnings coming in. It's got the ex-CEO of Aetna before they sold it to CVS as a leader of the company. And this just looks to me like it's getting set up to run. Maybe not yet, but this is one I have on my watch list. There's ramp. And I think that's it where I want to stop. Lastly, I mentioned the contra ETFs. And if you haven't followed me before and don't know what these are, the contra ETFs are instruments that you buy them to go higher, but they're the inverse of the underlying index. So for example, the dog goes up when the Dow goes down. Well, on Thursday, the Dow went down, the dog was up. On the Friday, the Dow was up, so the dog was down. I don't see a reason to buy that there. SDS goes up when the S&P 500 goes down. You can see what happened on Thursday, but on Friday it backed up. Take out of this 50 and it'll get interesting. SOXS will go up when semiconductors fall. These things are basing, and at some point they're going to become interesting, but wait till you have buy signals. The SQQQ goes up when the Qs go down, and this one threatened at the 50 but failed at the 50 on Friday. And the TZA is one that will go up when small caps, the Russell goes down. So I watch them, and when they move, they can really move. But let me just show you one thing before we say goodbye. And I'm not even sure that's enough. Let me keep going back. Nope. These things are not investments. They are trading vehicles. They are short-term holdings that you might entertain when you think the market's going to go one way or another. Notice how high in the hundreds and higher TZA was back in 2020. Now it's 18. This is the result of multiple reverse splits. So you don't buy and hold these things, but if you see the market rolling over, this is a way to protect your portfolio with instruments that you can often buy in an IRA as well. Have an awesome, awesome week. I look forward to being back on U.S. ground very shortly, and I look forward to seeing you at the Wealth 365 event. Hope you enjoyed the video, and we'll talk to you next week.